Hello, fellow traders. Today we'll cover how sophisticated AI is reshaping the financial markets. Today we'll cover Tesla as a live trade example to illustrate how AI influences price action and volatility, along with trading decisions. Today we're going to cover how is advanced AI affecting the market by Pajama Trader. Let's get into it. The rise of AI in financial markets. AI has rapidly become the integral market structure. By 2025, most equity trades are AI driven. Most major tech firms, investment banks, and hedge funds deploy AI for price forecasting, sentiment analysis, and order execution. Despite traditional analysis retaining its value, the dominance of machine-driven trading has shifted the balance of power and velocity within the markets. AI isn't a future concept. It's the backbone of modern markets. Order routing, news parsing, and high-frequency trade decisions happen at blazing speed, transforming both daily trade routines and long-term investing strategies. Tesla chart levels, why 338 and 300 matters now. For Tesla, the 338 level represents significant resistance, where prior rallies often stalled. The 300 level stands as a robust support thanks to repeated bounces and sustained institutional buying. These anchor points are not just technical curiosities, but crucial decision zones for both human and AI traders. Moving averages, particularly the 50, 20, and 200 day, frequently reinforce these levels. Real trade example, executing in the AI era. So I wanted to talk about this Tesla trade. Basically, saw that it was coming to a top with this doji here, and then jumped in, grabbed some puts here, because I knew that pretty much once it hit the 338 level, that it was pretty much going to head down, because that's what happened the last time it hit that level in May or June. So basically got in, took some profits here on 286, and then rolled this again, grabbed some more puts, and got out at 319. And now considering getting back in at 334 as it starts to fade to 338, but maybe grabbing a call because of this doji here. So looking for a bounce at 297 to head up, but pretty much playing the short side, spotting this doji here helped me ride the profit down, and now to possibly look at playing the other side of it, going back up. Suppose Tesla dips into 300 and 305 range and shows a bullish reversing candle with pronounced volume. This is a potential buy signal for those who trusted the support. A disciplined trader sets a stop loss just under 300 to minimize the downside. The logical first profit target is near 338, where the overhead resistance is, and potentially a flood of AI-driven sell programs could trigger a reversal. A sustained breakout above 338 with confirmation opens the door for higher targets, but always assess the risk in each of the setup. Discipline is paramount. Process rather than emotion leads. Let the AI-driven market volatility serve you and not surprise you. Always use stops and positions prudently, especially in an environment where algorithms can move prices swiftly. How AI changes the trading game. AI recognizes the same price structures human analysts do, but can act far quickly and at a greater scale. Over 70% of trading in the U.S. equities is now algorithmic or AI powered. These systems can scan millions of data points, news earnings, order flow, chart patterns, and then trigger bulk orders and set conditions when set conditions are met. This causes sharp rebounds at major support and dramatic surges at breakouts, but also introduces heightened volatility around key technical levels. AI speed is both a blessing and a challenge. It can offer liquidity in tighter spreads, but it also means technical levels can break and reverse in seconds. Awareness of the AI factor separates modern traders from those that get left behind. Risk, volatility, fakeouts, and regulation. While AI has brought efficiency and opportunity, it introduces risk. Flash crashes, stop hunting, volatility, and fast-moving fakeouts when too many algorithms converge on similar signals. This new environment often sees rapid, unpredictable price swings, especially near obvious chart levels like 338 or 300 on Tesla. Regulators are watching for manipulation and instability, prompting for new rules. With power comes risk. Always respect the responsibility of rapid reversals. Use stop losses, trade reviews, and position sizing to defend against outlier moves. No level is ever fully secure in an AI-dominated market. Takeaways. Advanced AI is now the core force in markets, intensifying the importance of classic chart levels like 338 and 300 throughout clustering orders and accelerated volatility, like in Tesla. Human traders must adapt by combining sharp processes and disciplined risk management and continual willingness to learn. Use AI-driven insights as tools to enhance but not replace. Thoughtful trade planning and review. Winning in today's market means blending the power of AI with thoughtful, repeatable processes. If you found value in this video, give it a like. Share this with other traders looking to edge up their trading. Consider subscribing for more Market Edge videos and alerts. And stay disciplined, stay curious, and use technology as an augmentation, not a shortcut. Also, use it for sound trading judgment. Thanks again for watching.